to Random Gleanings. He is Jesse. I am Chris. Jesse got an announcement to make.
Yeah, we've got some exciting new things kind of in the works right now.
Yep.
We've been doing Random Gleanings for a couple years, and we've got kind of a new idea. So
we're going to blend in some retirement readiness education, coaching, little higher level type stuff, but that's coming shortly.
Yeah, education, I think, easy to share with those that maybe don't have the advisory type setup already, that we'll still point them in the right direction. So I'm excited about it.
Good stuff.
Yep.
So let's talk about what's happening in the markets right now. So it's the end of May. Markets have been pretty good year to date, but there's a gentleman by the name of Byron Ween who is passed on now, but he used to do the 10 biggest surprises for the coming year list. And there were a number of folks kind of giving a nod to him who have put out 10 big surprises lists. But what I saw kind of consistently was the Fed's not going to cut rates this year. And, the market still thinks the Fed's going to cut rates. The Fed still thinks the Fed's going to cut rates.
And the year started with the expectation of 7 rate cuts, right? So that would have been a big surprise.
That's right. But probably the biggest so far that I see that's interesting is the bond market's still negative year to date. In fact, the bond market, as measured by the Bloomberg Aggregate Bond Index, which has an average maturity of 6 to 7 years,
That's right.
somewhere in the next,
Yep.
is -2 and change. Call it 2.4% down year to date.
Yep.
And that's through May 29th. Interestingly, longer-term bonds, which certainly we saw folks talk about piling into because they were going to cut rates and they were going to make all this money back in long bonds. Long bonds are down 9% year to date.
It's hard to believe because if we go to this next slide, it has been a trail of terror for the last 4 years for the quote-unquote safe asset, right?
Yeah, so the aggregate bond index is still down almost 12%, and long bonds are still down almost 40%, which isn't much different than what they were back in, the fall of 2022?
That's right. Yep.
But meanwhile, as we mentioned before, and, look, will the shiny stuff continue? We'll see. But this is year to date. Gold's up about 13%. The S&P's up 10%. Silver's up 31.5% year to date, so crushing so far.
Goodness, I may find some old grandma's forks or something.
Yeah, I've been hearing that. I've been hearing people saying, I got coins, and I have no idea what that's worth.
Right. Well, I know that those guys they're pretty, they're a pound of flesh when they buy that stuff. But.
No doubt. We talked some about international a couple weeks ago. Here's a chart of the emerging markets, which, would be Asia. India is still an emerging market, isn't it? Although
Latin America.
Yeah, India's kind of been coming on, though. So this is a chart of emerging markets. This is a weekly chart, and this is a comparison chart. It's a comparison of emerging markets versus the S&P 500. Right. So if it's dropping, that means EM is underperforming the U.S.
Correct.
Pretty markedly. You see this little, at the very bottom of the chart, down by the lightning bolt, you can kind of see how it started to clip upwards and maybe even look like it was going to violate to the upside, which would be a very bullish thing for emerging
Yeah, the green
markets.
line being a trend, obviously, and typically from a technical analysis standpoint, to violate that trend is it would to be the bullish. Upside would be a bullish thing. That's exactly right.
It would be, and it's looked a couple times like it was going to do it. I know for our fast relative strength measure, that's moved to where emerging markets on a short-term basis ranked first over the S&P. Though that's dropped and kind of ebbed and flowed back and forth.
But it's certainly moved up the scale from where it was a year or so ago, right?
And looking more broadly, here's the rest of the world. In other words, ex-US. This is a Vanguard ETF versus the S&P 500. And same thing. I mean, it's been a downtrend for a while. There was a little time period in 2023 when that seemed to be reversing, but nope. Back down again. So, it's going to be interesting to see if those things get legs and rally some. And I would also say that the technology side in the United States has been interesting. We looked a little while ago. So NVIDIA put out their earnings report, a few days ago now.
Last week, yep.
And it's pretty good. And they also announced a 10-to-1 stock split. And, the trend historically, or at least the past few quarters, has been if they do well, then the rest of technology does well also.
It's got a bit of a story stock in that sense, in that, the whole idea around AI, they are the leader of that kind of story right now. And so, yes, I think that the assumption is that as goes NVIDIA, so goes tech right now to a certain extent, but we've seen that maybe turn tide a little bit.
So just looking at about the 3 dozen sort of high flyer type names out there right now. And this is today. I mean, again, this is Thursday, March 30th. I'm seeing a few companies down a couple percent. I'm seeing some down 4%, a down 6%, a down 9%. And seeing, so Salesforce put out earnings last night. First single digit sales growth forecast. That stock's down 20% right this minute. And who knows, maybe that's a buy, because that's a pretty big gap to the downside. But goodness, I mean, that's getting your butt kicked. And the question is there maybe a little bit of headwind developing in tech? Only time will tell.
Yeah. And I, again, I think we've said this in this forum before, but, it's not necessarily that they're bad companies.
No.
It may be that the expectations of what these companies could continue to grow at a pace of has maybe caused a challenge here temporarily. So, but it is it's been a painful one for Salesforce today.
Yeah,
so
no question.
Yeah,
that's all I got.
Yeah, I got nothing else. Thank you all for watching. Again, watch out for this new series we'll be rolling out in the next few weeks to a month. We're excited to bring that to you, but we'll keep bringing you market updates and more here on Random Gleanings along the way. Talk to you soon. Thanks.